Hello again, traders, and welcome back to It's Crypto's trading channel. Another quick update for you guys, this time on Theta USDT. Things are starting to look interesting now on Theta for a potential swing trading opportunity. So let's make a multi-time frame update, starting here with the monthly time frame. So here on the monthly, we have this bullish impulse to the upside, which is followed by a correction. We can see during this correction, the market is showing signs of a deceleration. You can clearly see multiple rejections, and the bearish price action is beginning to decelerate here. So this shows us that we can expect to see new highs and the potential continuation to the upside. If we take our Fibonacci from the low to the high of the impulse, from this low where the last previous bearish candle closed, we can see the market is testing the 0.786 fib and showing a very strong rejection every time the market comes down and tests this area. So we have a nice area of demand on the monthly time frame that the market is currently testing. Let's drop down to the weekly time frame. Okay, so here on the weekly time frame, we can also see the area of demand which the market is currently testing and rejecting to the upside, and that is this one bearish candle. So as you know, if you follow our videos, when there is a bearish candle inside of a bullish impulse, you can expect this candle to act as support, and you can see that's exactly what the market has done. We made a correction and tested this zone and bounced off it, tested this zone, bounced off it, and so on. You get the idea. So anyway, here on the weekly time frame, we are testing this strong level of demand and showing very strong signs of rejection. We have this descending trend line, which is a very important trend line to break above for the bulls. When we do break above this trend line, I do expect a very strong impulsive move to occur. Let's draw on our monthly upside target. So we'll take our Fibonacci from the low to the high of the weekly or monthly correction. It's the same correction, so it doesn't matter. And the minus 0.272 will be our upside monthly target. So let's drop down to the daily time frame and see how we can be possibly looking for a potential entry. So here on the daily time frame, everything is becoming quite clear. On the daily time frame, we have this beautiful impulse which bounced off this demand zone. We have this nice impulse to the upside. Now, after an impulse, what you can expect the market to do is make a correction. If we want to measure the correction, what we need to do is take our Fibonacci from the low to the high of the impulse. So we can see that the market has made a retracement, a correction exactly to the golden ratio, 0.618 Fibonacci, and is showing signs of rejection at this zone. What we can also see all across this zone is a very nice level of support. So we have a clear level of support all across this zone with this one red candle in this bullish impulse. As you know, this will act as support, and we have clear support here. So this is a very nice confluence of support, and you can see currently, as we are speaking, the market is making a very strong reaction off this level of this level of daily support here. I do expect to see the continuation to the upside to follow and a new higher high to form from a monthly perspective, and the market to go and test this weekly descending trend line. If we want to gauge the next potential swing high, what we need to do, as always, is take our Fibonacci from the low to the high of the daily correction, and the minus 0.272 fib will be our next daily upside target. So let's now drop down to the 4-hour time frame and see how we can be potentially executing this position. So currently, as we are talking on the 4-hour time frame, the market is actually bearish. We have this descending bearish trend that we are seeing a sign of deceleration and the possibility of a rejection and continuation to the upside. However, one very important thing we have to take into consideration, we have not broke above 4-hour resistance yet. So we have clear 4-hour resistance all across this zone. Previous support here with this wick to the downside, we broke it to the downside, therefore previous support will act as resistance, and that's exactly what the market has done all across this zone. This is a very clear level of resistance, and the market is about to test this zone again. We have this double bottom formation here on the 4-hour time frame, but we are about to test this resistance zone, and the market could easily reject this zone and come back into this area of demand. That is why we cannot be entering a long position yet. what we need to wait to see if the market will do, we need to wait to see if the market will make a 4-hour higher high above this zone. If the market produces a 4-hour close above this level of resistance, will act as support all across this zone. And on the retest is where we can be looking for a potential entry. So if we see a 4-hour higher high above this zone, on the retest is where we will be looking for an entry. Our take profit, we've already identified the minus 0.272 Fibonacci, and our stop loss, as always, will go well protected below these lows and obviously protected by this level of support all across this zone. And this will give us a nice 1 to 3 potential risk to reward, so a potential 300% return on our leverage position. Obviously, bear in mind, we have not broke above this 4 hours resistance yet. The market could easily reject this zone and come down into this area. So we have to wait for the market to close above this zone before we can look for a possible entry on this setup.